The China Dream, China's 19th Party Congress, which wrapped up on 24th October, was all about setting the direction for China for the next 5 years. But it also went a lot further, with the goal to realize socialist modernization by 2035, titled Socialism with Chinese Characteristics. In this, China will have a central place in the world. However, the Communist Party will remain central and relevant to China. And right now, President Xi Jinping is central to all of it.
The key areas include quality of life, quality environment, and quality of products. All of these areas play to Australia's strengths as our reputation for quality is very high in China. China is Australia's most important trade partner. Here are the key areas from the Congress that will directly impact Australia.
It was highlighted that China faces fundamentally different challenges from the past. Development brought unprecedented growth to China and by extension to Australia. But it also brought unprecedented wealth gaps and environmental degradation, which now must be balanced. Accordingly, Xi reaffirmed a shift of focus away from growth at all costs toward a more equal, sustainable model, dropping the growth target in favor of tougher regulation and calling for quality and efficiency over quantity.
This slower growth will have a direct impact on Australia's economy, although as noted below, this is not a bad news story. Further, a more balanced economy will lessen the risk of a major downturn in China, which would have been more dangerous for Australia in the long term. While China has helped propel a period of impressive growth in Australia, its growth rate was already slowing. However, it is also worth remembering that the Chinese economy is worth more, almost double, now than when GDP growth was at its highest. In summary, 1% of China's GDP growth today is equal in value to 2% of GDP growth back in 2007. Exporters should rejoice given the quality of products we have here in Australia. The entering into the historic China-Australia Free Trade Agreement, or CHAFTA as it's known, in 2015, will see 98% of Australian goods enter China duty-free once the agreement is fully implemented. We as a country need to maximise the CHAFTA advantage we have. The value of trade with China is worth nearly $20,000 per Australian household. As noted in the Showman Australia Trade Report last year, 1 in 58 Australian workplaces are involved in direct exports to China. Furthermore, nearly 200,000 Australian jobs are sustained by direct exports to China.
China is aiming to become a manufacturing power from a large manufacturing country in 2025, which will benefit Australian resources exports. Xi sought to reassure that China is still open for business, which is great news for Australia, pledging to ease barriers to market access. China has set a 2020 deadline for building what they call moderately prosperous society. There are over 200 million people in China aged over 60. The Chinese government has increased its investment in aged care and improved the policies and regulations to encourage private investment in the senior living sector. At the same time, cultural and social attitudes towards aged care are shifting.
Australian providers have a competitive advantage in offering services such as diagnostics, quality assurance, quality control, general practitioner training, quality trained staff, and educational programs and other related areas such as health information technology. Further, CHAFTA has given Australian providers unprecedented access to the Chinese market, including permission to establish foreign-owned hospitals, clinics, and aged care facilities.
Xi stated China's commitment to mitigating climate change. China, he noted, is a participant, contributor, and leader internationally in this cause. As noted earlier, his speech underscored the need for harmony between human and nature. Development at the expense of environment will not be tolerated.
Australia is a world leader in the R&D of clean energy, and this policy shift provides enormous opportunities for Australian IP in the green space. Investment in Australia. There is still real concern in China about cap outflows and the stabling effects on the currency, and we expect further initiatives on top of the existing measures. Recently, China's State Council issued new rules outlining restrictions on overseas investments by Chinese entities by grouping investments into categories that are to be encouraged, limited, and prohibited. Investments that support the Belt and Road Initiative and are in energy and resources, agriculture, R&D and finance are in the encouraged category, which is good news for Australia.
However, large investment in real estate will be limited and will require approval, which is not good news for this sector of Australian economy. But supporting Belt and Road will be construction. Xi is also encouraging more of the rural populations to move to the cities to better include small farming households in upscaled agricultural operations. These people need to live somewhere, and we estimate there could be an additional 177,000 Australian jobs in the construction services sector by 2026.
So the future for Australia is not just in our trade relationship with China, but also potential investment into China, which is where we need to move to. There's a lot more detail to come out from the Congress, and we'll be releasing more information over the coming weeks, so please watch this space.